Welcome to This Explainer. All right, let's just dive right in and uncover the invisible plumbing that actually powers global finance. We all know how easy it is to interact with the financial markets on the surface, right? But beneath that surface, it's this fascinating, high-speed, incredibly secure world that very few people ever actually get to see. So today, we're going to explore the hidden engine room that keeps this whole shebang running smoothly.
It's a pretty simple question, right? You log into your trading app, you hit buy, and bam, you see the shares pop up in your portfolio. Naturally, we almost all assume that our broker is the one physically or, well, digitally holding onto those shares. But the reality of global finance is completely different. And frankly, it's way more interesting. So let's look at why your broker actually isn't holding your assets at all.
Here's our roadmap for today. We'll hit 1. The broker's silent partner. 2. The jewelry vault analogy. 3. Accessing the global network. 4. Core services and settlement. 5. Asset servicing and automation. And finally, 6. Protecting investor wealth. Starting off with Section 1, the broker's silent partner. Let's see how this concept really builds our understanding of what a broker's true role is in the financial ecosystem.
Imagine for a second that you're a broker. You've just executed this massive, highly profitable trade for a client. Let's say 10,000 shares in a major Japanese tech firm. Your dealer on the floor is absolutely thrilled, high-fiving the team, the whole deal. But right after that celebration, you are facing a massive logistical nightmare. How on earth do you actually get those shares all the way from a market in Tokyo over to your client's account while making sure the cash goes the exact opposite way at the precise same millisecond? I mean, are you going to FedEx physical stock certificates across the Pacific? Of course not. The truth is, most brokers literally just do not have the internal plumbing to handle that kind of transfer.
Instead, they rely on a highly specialized partner known as a custodian. Now, a custodian is typically a massive bank that steps in as the specialized backbone of global securities operations. Basically, they handle the monumental challenge of safekeeping those securities to minimize any risk of theft or loss. They are the ultimate silent partner, the ones doing the actual heavy lifting behind the scenes right after the broker makes that trade.
Moving right along to Section 2, the jewelry vault analogy. Abstract financial terms can honestly get a bit dry, so let's use a relatable comparison to make this crystal clear.
Think of your broker kind of like a high-end jewelry dealer. As a jeweler, their real expertise is in finding rare diamonds, understanding the market value, and negotiating the absolute best possible prices. But they definitely do not keep $50 million worth of diamonds just sitting in a desk drawer in the back office. That would be completely insane. Instead, they use a professional art and bullion vault. The vault is the one providing the climate-controlled rooms, the international transport networks, and, the armed guards. So in the financial markets, the broker is the jeweler doing the trading, and the custodian is that high-security vault providing the actual safekeeping and logistics.
Okay, Section 3, accessing the global network. So beyond just the security aspect, why doesn't a broker just lock the digital shares in their own servers? Well, it comes down to a massive logistical hurdle.
Just look at this number for a second. 50. A single active broker might routinely trade in 50 different countries all around the world. To hold shares directly, they'd literally need direct integrated access to every single one of those local markets. Maintaining the technology, the legal compliance, the on-the-ground staffing to directly tap into 50 different international markets, that is an absolute logistical impossibility for the vast majority of brokerages.
And that brings us to the concept of the Central Securities Depository, or CSD. Now, a CSD is basically the local market facility where the actual securities are ultimately held and transferred. Pretty much every country has them, but as we just mentioned, brokers rarely have direct membership in every single one of these worldwide depositories. It's just, well, it's way too expensive and way too complex to manage on their own.
So how exactly do they pull it off? Well, the custodian acts as a master key. By partnering up with a global custodian, the broker solves their massive infrastructure problem instantly. The custodian gives the broker one single, seamless entry point into a global network of dozens of local CSDs. It's brilliant, really. The broker just deals with their one custodian, and the custodian is the one managing that entire crazy labyrinth of global market connections.
This leads us to Section 4, Core Services and Settlement. Let's get into the nitty-gritty of how a custodian actually operates on a day-to-day basis.
Right after a trade, step 1 is safekeeping. Whether those shares are immobilized physical certificates locked away in a vault or just dematerialized electronic records. But steps 2 and 3, that is where the real magic happens. This process is called delivery versus payment, or DVP for short, and it is a seriously high-stakes dance. The custodian ensures that the broker's cash payment is only released at the exact microsecond that the securities are confirmed to be arriving. Seriously, if the shares don't show up, the cash doesn't leave. Period. This mechanism literally eliminates massive amounts of settlement risk from the entire global system.
Moving to Section 5, Asset Servicing and Automation. Because, as you might guess, the custodian's job definitely does not end the moment the trade settles. Let's look at what happens during the actual lifespan of an asset while it's sitting in your portfolio.
Think about all the things a publicly traded company does over time. When that Japanese tech firm we talked about earlier pays out a dividend or announces a rights issue, the broker absolutely does not want the manual headache of tracking thousands of separate payments for all their individual clients. I mean, who would? So the custodian takes care of all this through something called asset servicing. Their systems automatically push this dividend info to the broker, they collect the cash on the broker's behalf, and they even handle incredibly complex cross-border withholding tax reclaims. It's essentially a fully automated engine, ensuring investors get exactly what they're owed without the broker ever having to lift a single finger.
Finally, we arrive at Section 6, Protecting Investor Wealth. Let's raise the stakes a bit here. Everything we've talked about so far is strictly operational. But what happens to your hard-earned money if your broker hits a wall, faces a major crisis, and actually goes bankrupt?
While arguably the absolute biggest benefit of this entire custodian system is risk mitigation. By distinctly separating legal ownership from beneficial ownership, a critical layer of protection is formed for everyday investors just like you. See, the custodian holds the legal title just to make trading fast and efficient. But you, the investor, you retain the beneficial ownership, meaning you own absolutely all the economic rights to those assets.
And how exactly is that separation legally enforced? Through something called a nominee account. If your broker goes into liquidation, your assets are totally safe because they aren't actually sitting on the broker's balance sheet in the first place. They are held completely separate, strictly off balance sheet, in a nominee account managed by the custodian vault. Basically, the broker's creditors cannot legally touch your shares. No way. This exact mechanism of separation is precisely what gives global markets the fundamental confidence to safely trade literally trillions of dollars every single day.
Now, of course, maintaining this kind of bulletproof security requires some incredibly rigorous operational control. Managing a custodian relationship is governed by super strict service level agreements, or SLAs. For the back office teams, this means constant daily reconciliation. Every single day, these teams are doing the math, proving that the broker's internal records perfectly match what is actually sitting inside the custodian's vault. And it's only when those numbers match perfectly that the broker is free to go out and do what they do best, focus on the trading.
So, we've unpacked the vaults, the international access, the high-stakes dance of settlement, and the invisible shields protecting your investments. I want to leave you with this final thought. When you look at your portfolio today, realize that you aren't just trusting a glossy trading app. You are relying on a massive, hidden network of custodians working relentlessly behind the scenes. So, is your wealth safely anchored in this infrastructure of global trust? It's a really fascinating question to ponder. And once you finally see this invisible engine of global finance, I guarantee you'll never look at a simple buy button the same way again. Thanks so much for joining me on this explainer.